Welcome everyone to a Monday night edition of the weekly meetup. I was over at the FinTwit conference in Orlando over the weekend with Jonah Lupton, so we can do our Sunday night show as regularly scheduled. We got a great presentation for you tonight, a new VIP pick, but first a disclaimer, StoryTrading is not an investment advisor. That includes any of our guests unless they otherwise state so. Investing in securities involves significant risk of loss. This presentation is being recorded. The recording will be available to our paid VIP members for a period of 5 to 7 business days. And after that, we'll be posting it on social media. For those who are not familiar, what is a story trade? Story trading is the art of understanding market pricing, also known as the story behind the trade through the lens of the 4 pillars of fundamentals, catalysts, sentiment, and technicals. We are building an app to scale our very successful WhatsApp and Zoom communities. Our app will be the place to discover, collaborate, and validate market-moving information through crowdsourced research and social collaboration. So be sure to go to our website and get first in line by putting your email address in to get into that wait list for the upcoming app. Now, we do track our VIP picks. You can go see a Google spreadsheet up on the website. Since the very successful outcome of air test systems, we've been inundated. I've been personally inundated with lots of ideas on Twitter for new stocks, new picks that story trading might promote. So what we did is we set up a new process. This link is at storytrading.com/submit-VIP. It's not up on the website yet, so you'll have to watch this video to find out about it. Storytrading.com/submit-VIP. Lots of picks coming in, so we don't need to give it any more attention on the website as it is. So through that process, we got a new member of our community. His name is Jared Plotkin from Atticus Analysis. He'll be joining us in just a second. He's going to be presenting ticker symbol HCI. It's $137.02 right now, $1.16 billion market cap. Now, something a little bit different this time. We started tracking this as a VIP pick on September 27th, about 2 weeks ago, because he did tell me at the time. I vetted this idea after he submitted the idea. I spoke to him, went through a preliminary presentation, and we did not have time to put him in the schedule, but we did want to let our community know about it. So our community got a little bit of a tease on this stock. We opened up the research group for HCI ahead of the presentation so people can get involved and potentially get a starter position ahead of the official presentation. So congratulations so far. You've been right, Jared. Now here's the chart. Has a long history. So I wanted to put this back it's a weekly chart from 2012. And I just want to point out that's when right there chosen as a VIP pick. It's already up 20%. Last thing I want to mention is to remind everyone about those 4 pillars we just talked about. Anytime people present a VIP pick here on Zoom to the community, we ask them to divide up their presentation into the 4 areas of fundamentals, catalysts, sentiment, and technicals to make sure we cover all of that and have a holistic view of all of this information, which causes the market price that you see on the chart. So with that, Jared, you can go ahead and I'll stop my screen share and give it over to you.
Thank you so much. And thanks for having me. I really enjoyed participating in the community so far. Let me go ahead and see if I can share my screen here. Okay, so this is my presentation on HCI. It's an InsurTech with an upcoming spinoff. I also have a disclosure page. It says a lot of the similar stuff that Ben already said, so I won't go over that. Aside to say that page 7 and 8 are from phase 2 partners research on HCI, which I'm going to have a link in an appendix on this presentation in case this presentation could be shared with other people. I definitely suggest reading it. It's a really great resource for more information. Okay, so background on HCI is a property insurance firm based in Florida that's preparing for an IPO of its InsurTech subsidiary, TypTap. TypTap uses big data to create insurtech quotes that are faster, they're more profitable than traditional insurance methods. So what do I mean by that? First of all, they don't actually have to have an insurance agent in order to do their job. You just take a picture of your house, and then thanks to the big data that they have a bunch of different factors, including how far away is the house from a fire hydrant, from the fire department, et cetera, property values, and they come up with a price for the policy. So you can get the policy faster without having to deal with an agent. And the loss ratios are 10 to 15% more profitable, which is very important in the insurance industry. The valuation models show that this is undervalued. It's undervalued both relative to a recent private placement that they did. We'll talk about that more later, and relative to other insurtech companies. And one other thing that's really nice about this that I mentioned today in the community is that even though HCI is a disruptive software, platform with TypTap, because it's an insurance company, it still trades in the quote unquote value basket. And what that means is that it's going to, go up as interest rates rise. So a lot of you, myself included, were probably very tech heavy in March of 2020. Those stocks took a big hit as rates started to go up. We could potentially be heading into something like that happening again soon with upcoming tapering. So this is a great stock to own if you're trying to diversify risk away from potentially getting hit with rising rates. And the technical indicators show this is underfollowed and prime for a breakout as soon as they confirm a date. So I wanted to give you a little quote from the management. The future of insurance is digital. We live in an age of immediacy where customers demand instantaneous results with convenient delivery. Deriving tangible results on an accelerated timeline is not only possible, but effective by the rise of insurtech. This is Kevin Mitchell, president of TypTap. Now, I happen to think that management is super, super important for a company that you invest in. And that's because, bad management can kill a great company. I was in a company last year, On Track, and that company had an amazing product. But unfortunately, bad management has killed that stock. It's down something like 90% in just a few months. So having management that you can really have faith in is important. And we'll go more into why I have such confidence in the management later on in this presentation. So let's go over the fundamentals of HCI. It has a conservative portfolio securing its claim liabilities. It's primarily consisting of cash, Florida real estate, some of which has some upside that hasn't been reflected in book value. So keep that in mind if you ever look at a price to book value for this stock. The primary risk factor is a hurricane. That's the primary perceived risk factor because they have done a lot of property insurance in Florida. That's where the company has traditionally been headquartered before they started developing TypTap. But they don't actually have a lot of potential losses through hurricanes. And that's because they have a special hurricane insurance covenant that prevents them from catastrophic losses in the event that a huge hurricane hits Florida. So they're not really that vulnerable. HCI is already profitable. TypTap's already profitable. They have a manageable debt ratio of 0.74, so not that bad. And I'm sure that that ratio is going to go down relatively soon when they do the IPO. They have a nice sequential revenue wrap, and TypTap is growing at roughly 100% a year in terms of gross premiums written. There are 3 insider buys at open market rates in the past 12 months. Strong management team, high insider ownership, which is always a good sign. I think it's something like 14% or 16%, something like that. Specifically talking about TypTap, big data to generate quotes, more profit margins, as I mentioned, that's super important for the insurance industry. And earlier this year, they did a private placement with Centerbridge Partners. That's a very large private equity company that valued TypTap at roughly $850 million. So there were warrants issued in the transaction, but they show that Centerbridge believes that there's at least a 50% upside from that price. Normally, I don't like warrants. Sometimes warrants can represent a kind of overhang on the price of the stock. But in this particular case, it was extremely bullish. The private placement was well above market rates. And as I'm going to explain later, Centerbridge actually believes that the stock's going to go up a lot from here. Now, HCI at this point, they still own 88% of TypTap. They gave 12% away to Centerbridge. Their stake is worth at least $160 a share if you are valuing the minimum level of Centerbridge's warrants. And the non-TypTap related business is likely worth roughly 40 a share. And that means that the combined base value is 200 per share in the least optimistic case. And right now we're trading at 1.16 billion. That's 135 a share when I updated this presentation this morning. It shows you how what a tear the stock is going at. I updated the presentation from when I originally spoke to Ben, and that was this morning. And since then, it's gone up even more. So now let's talk a little bit about valuations. It's very difficult to have a consistent method for valuing insurtech companies. But one way to do it is to look at the market cap divided by the 2022 estimated gross premiums written. This is from Phase 2 Partners. So as you can see here, the average insurtech company for auto is 4.1. For homeowners, it's 7.8x. Homeowners is generally more because it's less competitive than auto, and the profit margins are generally higher. And we're growing at about double the rate of other homeowner insurtech companies. So if you assume that this company is trading at roughly the same multiple as the average insurtech company, then that's a price target of 322. If you assume that they are going to eventually trade at the same multiple as the average homeowner insurtech company, then that is a price target of 440. And that's at the numbers that we know about right now. And this company is growing all the time. So this could potentially be even higher. And what's most important to me when you consider these is that this company is growing faster and it's actually profitable. None of the companies that are listed for these averages are profitable. And if you want to take a little bit closer look at the details of some of the companies that Phase 2 compared TypTap to, you can see here that we're actually growing faster than these companies. Catalysts. In August, HCI confirmed that they are filing for a spinoff IPO for TypTap. They have preemptively taken the steps to legally separate the two entities that should shorten the timeline for the eventual IPO, probably within the next couple of months. Within the next couple of months of August, I should say. So I am actually expecting the news could come within the next couple of weeks. And I also think this is another great sign for management. Management did not wait until they were told by the SEC that they have to separate the company's management teams. They preemptively created two separate teams just so that they could make the process as fast and as clean as possible. So the near future is going to contain several events that could push the stock higher. And those are the IPO date being announced, which is very important. The roadshow will begin with HCI helping bid up interest in TypTap. Then you have the actual IPO. You have analyst coverage beginning, and then you have future earnings reports, which will show the growth of this company nationwide. They are expanding nationwide. It was just a Florida company just a couple of years ago, but now they cover half the country, and they're going to for the other half very soon. And the CEO is very bullish on this on the most recent earnings call. Looking at sentiment, this is, in my opinion, a criminally underfollowed company. This is less than 100K shares traded daily on average, less than 250 followers on StockTwits, almost no mentions on Twitter, aside from occasionally me, and no deep dive YouTube videos at all. We had no analyst coverage since announcing the IPO filing, which I think is very important. 14% short float. That could make for a short squeeze. Honestly, I can't imagine why anyone would be shorting it right now. Many recent and small under-followed spinoff IPOs that I have followed before have had euphoria moments. So this is tickers YIMARK, TIPT, and SRAX. They had a euphoria moment, and each of them experienced a rapid 100% runoff at some point, or run up, excuse me, at some point after the IPO date was set. Tiptree is actually another insurance company. So yeah, I think that the stock has gone up a lot. That's true. It was at $40 earlier this year, and it's now 135. But in my experience, looking at stocks that have spinoffs, the biggest movement will happen after the date is set. So I think that this is just a prelude to the big run up that we're going to have later. Looking at technical analysis, I do not primarily consider myself someone who invests based on charts. I consider myself someone that primarily bases their instinct on reading reports and presentations. However, I do analyze charts. I do take the charts into consideration. And I think this is a really nice looking chart. You have a really nice breakout with high volume when they announced the Centerbridge private placement, followed by some nice spacing. You then have the company saying in a very clear channel. You have another breakout on high volume when they announced that they're filing for the IPO. You have a gap fill followed by a cup and handle and a breakout as the anticipation grows. So yeah, this is pretty much how I'd want an ideal chart to look.
Hey, Jared, sorry to interrupt you.
Sure.
Usually we go uninterrupted until the Q&A, but if you can go right back to that chart.
Yeah.
Go back one screen. I just want to let you know how much I appreciate what you did here. This is what story trading is all about. Very rarely do you find people who do technical analysis and annotate the reasons for it, right? They'll just talk about support or resistance level, but you put the catalyst on this chart, and that's really helpful for people to understand the story behind the trade. So I just wanted to thank you for that.
Oh yeah, I appreciate that. I was gonna say, yeah, I think if the stock just went up for no reason, then there would be no value in looking at that and trying to make a prediction. But you can make the prediction by looking at this chart. You can say every single step of the way, the stock has gotten close to the IPO, the stock has gone up. So when they take another step toward the IPO, which is announcing the date, I think it's probably going to go up again, and it's probably going to go up again more than it went up before. So in my opinion, HCI is likely worth 200 per share in the very least optimistic case. Again, that's looking at the legacy value of HCI plus the 160 minimum price that Centerbridge believes that the warrants should be worth. And I believe is worth between 322 and 440 if we assume that this company should trade in line with these other insurtech companies. But in my opinion, it should probably trade for higher than that because it is growing faster and it is already profitable. And those other companies are not profitable. In fact, they're losing a considerable amount of money. In many of these cases, these companies are, nowhere near profitability. So I think that means that the multiple should be considerably higher potentially than this 440. Now we are up over 100% year to date, but the period of fastest price growth usually will occur after the IPO date is set. That's probably going to happen soon. And there's currently very little retail participation, low trading volume, low market cap, low float, sizable short float, all the conditions that you would want for an explosion to the upside. And as I mentioned just now, it has moved upwards every step of the way towards the IPO. And there is no reason to think that it won't continue to do so. This is an innovative product with, potential to disrupt a incredibly large and very profitable industry. So with that, thank you so much for giving me some of your time today. And yeah, just let me know if you have any questions.
Great. Thank you so much, Jared, for that presentation. If you do have any questions, go ahead and raise your hand or put in chat. I'm going to get started with a couple of questions of my own.
Sure thing.
First thing you mentioned that their liability is limited because there's actually, you know what? Let me just stop the screen share here. Do you mind stopping the screen share?
Sure.
Yeah. All right, great. Just so we can talk to each other in full view. You mentioned there's a special hurricane insurance covenant.
Yes.
Which limited their liability. I'm curious how that works, and if there is such a thing, why would any homeowner want to get insurance through them? Isn't the point to be covered fully if an hurricane like destroys your house?
Okay, so HCI, I don't remember the bank, but they purchased the covenant through a bank, and the bank will help them if the hurricane reaches a certain amount of damage. So if it's a small hurricane, we actually had a small hurricane hit Florida this year, but that only caused a small amount of damage. So HCI will pay for that out of their own pocket. But if the hurricane is a very, very large hurricane and the losses reach a certain amount, then the bank will step in and help HCI cover these bills. So for example, like if you look at like Hurricane Katrina, no insurance company would be able to pay out all the claims of that. So it's like the insurance companies purchase their own insurance on the event of a very, very large hurricane, and the bank will only help them out in that circumstance.
But
they'll have to pay out of pocket for a small hurricane.
Why is the bank doing that? What do they get out of it?
They get a fee per year.
Okay. So it's like a backstop insurance. They're agreeing to support
Yes,
them.
it's a backstop insurance, exactly.
Uh-huh. All right, interesting. All right, looks like a couple questions coming in. So let me just ask my second one and then we'll go to the audience ones. So you mentioned that the private placement was above market rates.
Yes.
Actually, can you actually here, let me put my screen up here now. I got a chart. Do you remember when that happened? Is the chart showing?
Yes.
Yeah, do you remember when that happened and how much above market value was it?
So it happened in I think around March 2nd, and it was very significantly above market rates. At that particular time, um, let
Okay, I
me,
see it. I see it. I see the candle. This must be it because it's high volume and it gapped up.
yeah,
So that's
at
actually pretty bullish here because we closed that week
yes,
at 57.87, opened the following at $70.
yes.
So that's rare to see. It's great to see when there's an offering and the stock gaps and runs. So go ahead, tell us more about that.
So yeah, I think that there were warrants that were going to strike at something like $74, and the stock was at $57. And then there was a second round of warrants that are going to strike only if TypTap eventually receives a post IPO valuation, which would be roughly equivalent to HCI being worth 160.
Hmm.
So it was a combination of essentially they got 12% of TypTap equity, and they paid a certain amount for shares, and they paid a certain amount for the HCI warrants striking at $74. Then they paid another amount for warrants that would only convert if the company reached 160. That's why I use that number.
Okay, great. Thank you. That was helpful. All right, we
Yeah.
got a couple audience questions coming in. The first one, what kind of moat does the company have against copycat competition?
So as far as I know, there isn't anything else like this out there. I mentioned that there's other insurtech companies, but they don't necessarily, they're not related to this company in any way. One of the companies, for example, Mile, charges people per mile that they drive for car insurance. Another, Lemonade, the idea is to manage different insurance products under one app. The idea of getting rid of the insurance salesman and replacing them with a big data algorithm, I'm not aware of any other company that's done this. The algorithm is proprietary. They have their own system for doing it. I've spent a lot of time. I've pretty much looked at every single insurance company out there. I know that that sounds like a great undertaking. It took me many hours, but I looked at pretty much every insurance company that exists, and I haven't seen anything like this. So I don't know what kind of threat they would face, but I haven't found it.
Okay, similar question. First of all, kudos to you, great presentation. Joshua says, could you add a little color to how HCA's offering is differentiated from the competition? It's basically the
Yeah, I think
question there.
one way of looking at it is a lot of times when a company decides they want to innovate insurance, well, the way they try to innovate it is they try to change the sales funnel. And like I mentioned with Lemonade, trying to have different sales funnels all in one app. And changing the sales funnel doesn't really add value to the company aside from maybe getting a larger funnel. It doesn't necessarily make the company more profitable. It doesn't make it more successful. It doesn't make the experience necessarily better for the customer either. That's the thing that I've noticed about this. It's like, oh, well, we'll charge you per mile. It's like, okay, how is that better for anybody? Like, why is that necessarily a big thing? Maybe if you don't drive a lot, you get a lower price, but then how does the company make up the difference? So the difference here is that they're making the insurance salesman obsolete. They're taking away that part of the equation and saying, we don't have to pay the salesman. We don't have to have the salesman talk to the person. We don't have the salesman go to the person's house. The person answers a few questions on a website and they'll get a quote and they can sign up in less than 5 minutes. Part of the savings is passed on to the customer. Part of the savings goes to HCI, and it's more profitable to do this than it is to have the actual person. So by removing a step from the process and by making that employee redundant, you actually have a leap forward in the actual sales funnel, which makes it faster, better, and more profitable. And I think that if you look at like Lemonade, they're just not doing that, and that's why Lemonade hasn't been that successful, in my opinion.
Okay, great. No further questions or any final comments you had you wanted to make sure people knew about on the stock chart?
Yeah, I know that this is something that may not be super exciting, at least compared to a semiconductor or a VR thing. It's not, it doesn't necessarily seem like a fun stock, but the way I think about it is you've taken a revolutionary approach and you've revolutionized something that is boring. Like, Facebook revolutionized advertising by getting it out of the newspapers and being able to target it to people. And I think you have something like that here, big data being used to, more profitably predict the value and risk of an insurance that's better than a human being can do. That's a huge leap forward. So while the actual industry may feel like kind of a snoozer, this is a extremely exciting, disruptive, and already profitable technology. And you and we're getting in when no one else is paying attention. Nobody is following the stock. Nobody's talking about the stock. Almost nobody is trading the stock. So the way I think about it is, I think it's very exciting to get on the ground floor of something this big.
Great, excellent. Definitely a good start, a good idea you gave us. It's going to require further collaboration, I'm sure, for a lot of people. I will want to especially look at the competition, look at some specific numbers. So we could do that all in our HCI research group on WhatsApp. So go ahead and sign up, become a VIP member at StoryTrading. You can access that. We do have, before I go over events, I just want to let everyone know after the official recording of this presentation, we're going to hang on and have an after hour session. It is Monday night. We already did Trade of the Week Sunday yesterday, digitally, remotely without a Zoom session. So we got a bunch of extra time tonight. So after we stop the recording that's going to go on social media, you guys hang on and we'll have a little after hour session. So for those of you who are not part of StoryTrading, you go to the website, click on VIP events. You can see what events are coming up. We are interviewing a CEO. We're bringing back the CEO of QC Copper Wednesday at 4:30 p.m. And we have a bunch of other updates too. We have collaborator James Ticknor over at LD Micro who's going to be giving us a live update about what's going on at LD Micro this Thursday. I believe we have another VIP pick Sunday night. We got a packed schedule, so go ahead and follow us on YouTube, follow us on StoryTrading, help grow our community. And with that, everyone, thank you very much, and we'll see you next time.